Good evening. My name is Tarek Nasser, and today I'll be presenting my global strategic analysis of Skechers. This presentation will explore how Skechers built its global presence, adapted to market challenges, and continues to compete against major footwear brands. Let's begin with a quick look at the company's background. Skechers was founded in 1992 by Robert Greenberg in Manhattan Beach, California, after his earlier success with LA Gear. The company began with men's street shoes and evolved into a global lifestyle and performance brand. It went public on the New York Stock Exchange in 1999 under the ticker SKX and continues to operate its headquarters in the United States. Today, Skechers serves more than 170 countries with over 4,600 stores worldwide. Known as the Comfort Technology Company, Skechers remains family led by Robert and Michael Greenberg, focusing on innovation, comfort, and global expansion. Now that we've covered the company's history and growth, let's move to its products and key stakeholders. Skechers offers lifestyle, performance, and comfort footwear for men, women, and children. The company continues to grow its apparel and accessories to strengthen brand diversification. Products are sold through company owned retail stores, distributors, and e commerce, creating strong visibility across regions. Its key stakeholders include customers, employees, investors, suppliers, and strategic partners who help sustain operations worldwide. Skechers focuses on sustainable growth, comfort innovation, and responsible sourcing, aligning business goals with ethical practices. Next, we'll review Skechers' financial performance to see how these strategies are reflected in its results. According to the Skechers 2023 annual report, the company generated about $8 billion dollars in global revenue, roughly 7% higher than the previous year. Net income reached around $420 million, dollars, reflecting steady profitability despite inflation and higher logistics costs. The chart on this slide highlights Skechers' consistent revenue growth over the past several years, supported by both domestic and international markets. The United States remains the largest market, making up around 40% of sales, while international growth continues across Asia and Europe. A balanced mix of direct to consumer and wholesale distribution supports strong cash flow and financial stability. With healthy liquidity and low long term debt, Skechers is well positioned to keep investing in comfort technology and global expansion. Looking at multi year trends, Skechers' revenue has grown consistently since 2020. Despite inflation and supply chain disruptions, its ability to manage costs during these volatile years demonstrates operational resilience. Moreover, the company's liquidity ratio and minimal debt load provide flexibility for continued investment in global markets and new technologies. Next, we'll compare these results with major competitors to understand how Skechers performs within the global footwear market. When compared with global footwear leaders Nike and Adidas, Skechers operates on a smaller scale but demonstrates impressive financial efficiency. As shown in the table, Nike's revenue exceeds $50 billion dollars annually, while Adidas generates around $23 billion dollars. Skechers, at roughly $8 billion, dollars, achieves similar operating margins of about 9%, nearly matching that of Adidas, and maintains one of the lowest debt ratios in the industry at only 0.1. This lean structure allows Skechers to reinvest in innovation, comfort technology, research, and digital growth without the financial constraints faced by larger competitors. While Nike and Adidas focus heavily on premium pricing and marketing scale, Skechers succeeds through operational discipline, affordability, and broad demographic appeal. Another key comparison lies in marketing expenditure. Nike and Adidas allocate close to 10% of revenue to marketing, while Skechers spends roughly half that amount yet maintains impressive brand visibility. This efficiency reflects Skechers' disciplined spending and word of mouth driven consumer loyalty. Next, we'll move from the financial perspective to the external strategic environment that drives these results. Skechers operates in one of the world's most competitive footwear markets alongside major global players who we just talked about, Nike and Adidas, as well as Puma. According to Statista's 2024 Global Sneaker Market Report, these brands dominate worldwide market share, but Skechers continues to perform strongly as one of the top global footwear companies. The chart on this slide highlights that competitive distribution, showing how Skechers maintains its position through affordable pricing and comfort-focused innovation instead of direct price competition with premium brands. The company benefits from increasing demand in developing markets, particularly across Asia and Latin America, where a growing middle class values both quality and accessibility. At the same time, external challenges such as material cost fluctuations, shifting consumer preferences, and sustainability expectations continue to shape the competitive landscape. Despite these pressures, Skechers' strong brand recognition, international partnerships, and diversified distribution network position it for long-term growth and stability. One factor shaping the global footwear market is the shift in consumer behavior toward lifestyle and athleisure products. Post-pandemic, comfort-driven fashion has blurred the line between performance and everyday wear, a trend that Skechers has been particularly well positioned to capture. The company also benefits from demographic changes, especially the rise of health conscious and aging populations seeking supportive footwear solutions. Additionally, digital retail platforms have increased competitive visibility but also provided Skechers a channel to expand in regions where physical retail was previously limited. These global shifts highlight that Skechers' opportunity is not just in competing on price, but in owning the space where comfort, accessibility, and wellness intersect. Next, we'll look at how Skechers translates these external challenges and opportunities into its marketing and brand positioning strategies, defining how the company connects with consumers across global markets. Skechers' marketing and brand positioning play a central role in its continued global growth. Positioned as the comfort technology company, Skechers communicates a clear, consistent identity that resonates with value conscious consumers worldwide. The company leverages celebrity partnerships such as with Snoop Dogg, Martha Stewart, and Doja Cat, who you can see on this slide. They leverage these celebrity partnerships to bridge generational and lifestyle segments. These collaborations keep the brand culturally relevant and extend visibility both and these collaborations keep the brand culturally relevant and extend visibility across both fashion and performance markets. Affordability remains one of Skechers' biggest advantages. While Nike and Adidas focus on aspirational luxury, Skechers delivers comfort-driven performance products at accessible price points, aligning with its middle market strategy. Additionally, the company's global retail footprint, combined with robust e-commerce platforms, ensures consumers can experience the brand both in store and online. Skechers also localizes its marketing, tailoring campaigns to regional preferences while maintaining consistent global messaging. Next, we'll examine the company's internal strength, its resources and capabilities that support its strategic success. Internally, Skechers' resources and capabilities form the foundation of its success. A strong financial base allows the company to continuously reinvest in product innovation and new market development. Proprietary comfort technologies such as ArcFit and Hyper Burst Fuel differentiate Skechers by combining performance and everyday wearability. The company's global supply chain and logistics network enable efficient production and timely distribution across major markets. Its workforce emphasizes creativity, adaptability, and product quality, reflecting a culture built on design and operational excellence. Finally, a trusted global brand and marketing partnerships with athletes and celebrities strengthen customer loyalty and expand brand visibility. Next, we'll look more closely at one of Skechers' most valuable internal resources, its people and organizational culture, and how human capital supports these capabilities across its global operations. Skechers' people and culture are a core strategic asset. As a family led company under Robert and Michael Greenberg, decision making emphasizes trust, speed, and design driven execution. The workforce of more than 12,000 employees across over 170 countries enables scale while keeping operations agile. Culturally, Skechers blends retail and design teams to stay close to the customer, prioritizing comfort, quality, and service at accessible price points. The company invests in training and inclusion, building frontline capability in stores and strengthening product knowledge that supports conversion. Importantly, talent programs are aligning with sustainability and digital goals, so teams are equipped to deliver on ESG initiatives and data informed operations. Next, we'll connect this human capital foundation to Skechers' broader business and corporate strategy. Skechers' business strategy combines cost efficiency with focused differentiation. According to the Skechers 2023 annual report and recent investor updates, the company maintains affordable pricing while innovating with comfort technology and lifestyle design to distinguish itself from larger competitors. The image on this slide highlights one example of that approach, a global collaboration between Skechers and designer Diane von Furstenberg, reflecting the brand's commitment to diversification and creative partnerships. Skechers continues to expand its direct to consumer and digital channels, giving it greater control over pricing, margins, and customer experience. Internationally, the company prioritizes measured expansion through joint ventures and partnerships, allowing flexibility and lower risk in emerging markets. At the corporate level, Skechers focuses on consistent long term growth rather than aggressive mergers or acquisitions, ensuring financial stability as it scales globally. Digital innovation is another pillar of this strategy. The company continues to invest in mobile integration and real time data analytics, which allow for personalized product recommendations and streamlined logistics. These capabilities not only improve the customer experience but also enhance profitability by reducing excess inventory. Skechers' strategic balance between affordability and innovation gives it a competitive edge in volatile markets. For instance, while Nike and Adidas invest heavily in marketing and brand prestige, Skechers directs resources into product R&D, creating technologies like the ArcFit insole system, validated by podiatric certification, a key differentiator in comfort credibility. The company's strategy also reflects a focus on vertical integration. By owning parts of its manufacturing and distribution, Skechers maintains tighter control over quality, inventory, and cost structure. This combination of vertical efficiency and product integrity supports sustainable profitability without the need for price hikes or high end positioning. Next, we'll examine some of the challenges and controversies Skechers faces as it continues its international expansion. Skechers, like most global footwear companies, faces periodic challenges tied to its size and international operations. According to third party monitoring disclosures, the company has strengthened oversight of its manufacturing partners after earlier concerns about labor conditions in certain supplier factories. The image on this slide shows one of Skechers' major distribution facilities, representing its commitment to global transparency, modern logistics, and responsible operations. It has expanded environmental, social, and governance programs to improve accountability and promote ethical sourcing across its worldwide supply chain. Sustainability expectations are also rising, with consumers and regulators demanding measurable progress in materials, recycling, and energy efficiency. At the same time, Skechers competes with fast growing brands such as On and Hoka in the comfort performance segment. While global currency fluctuations and slower economies add pressure to margins, despite these challenges, Skechers continues to invest in ethical manufacturing, ESG initiatives, and digital growth to maintain its long term reputation and operational stability. Next, we'll examine how Skechers is addressing these challenges through technology, sustainability, and forward looking innovation, key elements driving its future competitiveness. Skechers' future competitiveness depends on continued investment in technology, sustainability, and innovation. In product design, Skechers leads with proprietary comfort technologies such as ArcFit, Hyperburst, and the growing hands-free slip-in line. The company is also expanding its digital infrastructure, using data analytics and AI forecasting to optimize inventory and anticipate consumer demand. Sustainability remains a key pillar. Skechers has committed to reducing its environmental footprint through recycled materials, renewable energy at distribution centers, and enhanced auditing of its global suppliers. Its ESG reporting aligns with international standards, signaling transparency to investors and regulators. Looking forward, Skechers is exploring automation and smart manufacturing to enhance speed to market while maintaining quality and cost efficiency. Together, these innovations demonstrate that Skechers isn't just maintaining competitiveness, it's evolving into a forward thinking, technology enabled global brand. Beyond materials and manufacturing, Skechers is also investing in digital innovation to enhance consumer engagement. The company's global app ecosystem and loyalty programs gather real-time customer data, enabling personalized recommendations and trend forecasting. This digital feedback loop doesn't just improve sales, it informs product design and regional assortment planning. From a sustainability perspective, Skechers is beginning to incorporate life cycle thinking, evaluating the environmental impact of products from sourcing to end of life recyclability. Its transparency in publishing annual sustainability reports aligns with global benchmarks like the Global Reporting Initiative, setting measurable goals for emissions reduction and waste management. Together, these initiatives demonstrate Skechers' transition from reactive compliance to proactive sustainability leadership, ensuring innovation and responsibility grow hand in hand. Next, we'll explore how Skechers can put these strategies into action while managing the risks that come with global expansion. For Skechers to sustain for Skechers to sustain its growth and achieve long-term success, execution and risk management are just as important as strategy. The company can implement its digital sustainability and expansion initiatives in phases, prioritizing key regions such as Asia Pacific and North America before full global rollout. Diversifying suppliers and investing in logistics resilience will reduce vulnerability to disruptions like material shortages or shipping delays. Managing currency and inflation risk through cost localization and regional pricing strategies can protect margins, particularly as Skechers expands into emerging markets. At the leadership level, accountability for ESG goals should be clearly tied to measurable results, ensuring consistency across divisions. Finally, maintaining financial discipline, funding innovation without overspending, will balance opportunity with stability. These measures transform Skechers' strategic goals into realistic, measurable actions and provide the agility to navigate market uncertainty. Next, we'll conclude with Skechers' long term viability and final strategic recommendations. Skechers enters the next decade with a strong financial foundation and a clear strategy for sustainable, responsible growth. According to the Skechers 2023 annual report and multiple market analyses, the company is well positioned to maintain steady expansion through innovation, affordability, and global brand strength. Skechers should continue investing in its core comfort technologies while accelerating digital transformation to improve e commerce and direct to consumer engagement. ESG goals should evolve into measurable, publicly reported commitments to enhance transparency and trust. Strategic marketing and partnerships, such as the recent collaboration with artist and entrepreneur Snoop Doggy Dogg, show how Skechers can blend innovation, culture, and brand appeal to reach diverse audiences worldwide. Maintaining cost discipline while exploring selective product diversification will keep the company profitable and adaptive in a competitive environment. In summary, Skechers is poised to sustain long term viability through innovation, ethical growth, and strategic resilience. Thank you for your time and attention. Please feel free to email me with any questions regarding this presentation or the strategic analysis behind it. I appreciate your time and look forward to your feedback. And on the next slide is a list of references used for this analysis. Thank you for your time.